On today's Hot Sheet, I'm discussing builder perspectives on the spring market, flatlining home ownership rates for Gen Z and Millennials, and weekly unemployment. Today is Thursday, March 27, 2025. I am Byron Lazine, and the Hot Sheet starts now. Live from Naples, welcome into the Hot Sheet. Let me know in the live chat where you are tuning in live from. Wherever you may be, let's connect together there in the live chat. All right, we're going to be finishing up the week here on the Hot Sheet. It's been an active week. We've got a bunch of stuff here to consider. There's been a lot of news right now on home builders and homes. New construction is getting out of control. Actually, we saw, earlier this week, maybe it was even yesterday on yesterday's Hot Sheet, if you go back and watch the replay, that months of supply for home builders actually moved off of the over 9 months and down to 8.9. But I'm seeing on X all the time, the doom and gloomers talking about, how much inventory there is and how out of control it is and how this market's going to crash and all of that kind of stuff. We talked about, Haley had that creative headline yesterday, but the market isn't in a position right now to crash. This isn't anything close to 2008. But one thing to keep an eye on is, what those builders are seeing. It speaks to how much demand might be there throughout this year, the activity and the tours that they're seeing. It's all relatable. Okay. So we'll take a look. We've got a Fortune 500 home builder, Lennar, has yet to see the pickup typically associated with the beginning of the spring sell-in season. There's a couple of reasons, I think, for this. One of the reasons is, they're building above what the average existing home sales would be. But they're ranked number 26 in the Fortune 500. They're a major player, obviously, in home building. And what the CEO of Lennar, John Jaffe, said is, we do not see the seasonal pickup typically associated with the beginning of the spring selling season. So we continue to lean into our machine, focusing on converting leads. Look at that. Okay, that's what business is all about, converting leads. He's talking the book there, and appointments, and adjusting incentives as needed to maintain sales pace. They're focused on sales pace versus margin. Their margin is coming down. I'll share it with you. These adjustments came in from the mortgage rate buy downs, in the form of the mortgage rate buy downs, price reductions, and closing cost assistance. Closing cost assistance, CEO of Lennar, another way of saying, hey, we're willing to play ball on agent compensation. Okay, these CEOs did some type of a lap, victory lap when the settlement came out. We're in a little different world than we were a year ago for builders. Like, buyer agent commissions, we see those going down. I'm going to show you a number that shows quite the opposite, that these incentives and closing cost assistance, however you want to frame it, they're actually going up for builders. Here's the housing activity inventory for sale compared to the pre-pandemic levels. Metro shift between February 2019 and February 2025. I mean, this is just active housing inventory for sale. Okay, so this kind of just frames up, the areas that are really seeing, and these are the areas that they build in that are really seeing this increase in inventory. I mean, look at this. 80% down here in the Hartford region, Connecticut, Rochester, 62% down, Chicago, 60% down, Milwaukee, 43, Detroit, 43. So this northeast into the Midwest section of the U.S., inventory is well off of pre-pandemic levels. But where they've been building, Florida, it's up, Punta Gorda's up 76% pre-pandemic levels. Punta Gorda, and the surrounding areas, the inventory has just ballooned the most in the country. Denver out west, 28%. Texas, where they've been building, Austin's up 24%. New Orleans is up 21%. Tampa's up 6% pre-pandemic levels and rising in some of these areas. So where they've been building they've been aggressive in the areas that they've decided, the Sun Belt areas, to bring more inventory into those areas. But, there's still a lot of people that want to live in the Northeast. Not everybody's moving to Miami. Not everybody's moving to Southwest Florida. Not every California, resident wants to live in Austin or in Dallas. Okay. There's plenty of people that want to stay in California. There's plenty of people that are quite happy in New York. The Big Apple's the Big Apple for a reason. Not everybody's leaving these states, even though the migration headlines of the last 5, 6, 7 years want you to believe differently. And by the way, most people, look the data up for yourself. Most people don't move outside of the 100-mile radius that they grew up in. Okay. I mean, I say this stat sometimes and people are like, well, that can't be true. Okay. How many people, I'm just going to Google it. I don't have GPT up right now, but I'm just going to Google it. How many people live within 100 miles of where they grew up? Okay. We'll use their AI. It's around 80%. 80% live within 100 miles of where they grew up. This is U.S. Census Bureau and Harvard University tag teaming that data. It's 80% live within 100 miles. So everybody moving to the Sun Belt states isn't happening. It's not gonna happen. And this is a historical trend. Okay. Maybe only now will you see, a little bit of loosening up in a world where you can work a little bit more virtually or hybrid, all of that kind of stuff. Think about, listen, I bet you on the live chat here, we've got Joanne chiming in. Joanne saying she lives within 60 miles of where she grew up. I would venture to say maybe, 8 out of 10 of our live chat lives within 100 miles of where they grew up. So everybody moving to Florida, moving to Texas, not going to happen. And by the way, you get a lot of boomerangs out of there. Florida agents know this. You get some boomerangs. I mean, it's a good thing. Hey, you bought 3 years ago. Now you're ready to go back. And that boomerang buyer, they're like, I'm out of here. It wasn't for me. I've done, a couple of Augusts now in Florida humidity, and I'm ready to move on from that. So where's Lennar seeing the weakness? That's where they're seeing it, where they maybe overbuilt. Okay. Lennar doesn't build in the Northeast where the inventory is actually lacking. They don't build in the northern Midwest, area. They build in Florida. They build in Texas. They build in Arizona. So Lennar seeing greater softness in Texas and Florida markets. San Antonio, Cape Coral, and Punta Gorda are the 3 areas that they're seeing the most, issues for buyers. Well, these are the areas that they're seeing the most issues. These are the areas that have the most inventory. Cape Coral, Punta Gorda, you've got the biggest increase in pre-pandemic inventory in the country in those areas. In general, home buyers in Florida and Texas are the 2 highest volume states. Needed more help than most other markets around the country. We need more incentives in these areas to assist buyers. No, you built too much in these areas and you forgot about the areas where people still want to live. That's one of the things. I know it's listen, you want to build in the Northeast, it's going to cost an arm and a leg. I get it. Here's the average selling price for Lennar, $413,000. Now, what's interesting here? This is a good way to put it for invest. This is a good way to maybe frame the conversation the way you want it for investors. The Lennar's average sale price declined net of incentives. Okay, so net of incentives declined 1%, 413,000 in quarter one to 408,000 in 2025. But here's what they're not telling you. Okay. Look at this. Lennar now spent the equivalent. They spent the equivalent of 13% of the final sale price in incentives, such as rate buy downs and whatever. So The final sales price, they want to keep as high as possible. Okay. So they want to keep this number, 408,000, versus the 413. They don't want their comps to be 375, to be 385. A lot of times these incentives are keeping that sale. The reason why they're doing incentives, it's to keep that sale price as high as possible. Okay. They want that comp as high as possible. So a $400,000 home, 13% would be 52,000 in some type of incentive, maybe an extra perk, updated kitchen, closing costs, some type of rate buy down. Okay. Look at this. Here's something that's really interesting. This is when their chests were puffed out. They couldn't lose. Builders couldn't lose in 2022. In 2022, they spent 1.5% of the final sale price on sales incentives. Okay. 1.5% in 2022. Okay. They expect long-term. This is the Lennar co-CEO. Anybody with a co-CEO that always confuses the heck out of me. I mean, who the heck would run co-quarterbacks? Okay. It doesn't make sense. These are outsized initiatives for the moment, and normalized incentives should be around 5 to 6%. Okay. Well, coming off of 22 in 23 and then, into early 24, when the conversation focused around, what's going to happen with this Michael Ketchmark lawsuit, and, what's going to happen with, buyer, compensation, and are there actually going to be, builders that want to do buyer compensation, and builders kind of, went out there and took a little early victory lap. I think they were buying a little bit too much into the 7 million homes short of supply. Listen, I've been saying for a long time that 7 million homes short of supply is to meet buyer demand is so incredibly misleading in this country. To me, it doesn't make much sense unless you put in affordable. Okay. And Realtor.com saying 3.8. Everybody's got a different number. All the numbers are huge. If people don't dig into the data, they just run with, we don't have enough homes in this country. We need more homes. We need more homes. We need more affordable homes. That's ultimately what we need. If we don't have affordable homes, then, none of it means anything. But builders went out there, and when the news broke that, Michael Ketchmark got his bag and everything changed, and what the questions were asked, what do we think is going to happen with, home builders? With home buyers and their buyer agents. Okay. Well, this is what happened. How many home builders now expect change? 85% said this was in September of 2024. 85% said no changes to buyer agent commissions. But there was 10% that said these are going to go lower. Okay. And we saw some of the quotes from some of the biggest names that expected it to go lower. Some of the national home builders. Okay. 6% say we're going to switch to a flat fee commission, 0%. So, a couple home builders out of 10 were saying, well, these are going to go lower. Okay. This is according to John Burns' August home builder survey back in 2024, that these are going to go lower. These are going to go lower. Now, if you look back into 2023, that number was even greater on the home builders that thought this number was going to go lower. Well, now that they're paying 13% on sales incentives, which includes closing costs, which is another way to say, hey, there's going to be buyer agent compensation. Listen, they want to push this back down to around 5 or 6, which is basically accounting for, a couple of incentives maybe and comp. Home builders are more than willing at 9 months of inventory, 8.9, to give buyer agent compensation. I think now's the time for real estate professionals to make sure that they go and create these relationships. You're going to have a better time when their chest puffs back out when times get good, of having builder relationships if you build them now when they need you. Don't bail out on them. Okay. Like, don't do what they did and do a victory lap. Go help them out, promote these communities, be educated on the communities, bring buyers around these communities, work on compensation plans now, show them that you care now. That'll pay off when things get good for them again. Because right now their gross margin is shrinking. That is something that they've got to answer to every 90 days. Lennar's gross margin on home sales for the first quarter by the year is down to 18.7%. The Lennar CEOs say that they're more focused on volume. They want transactions over margin. That means they're willing to negotiate. They're willing to do buyer comp. They're willing to do these things. 27% margin in 22, when they were really having some of those, those 24, they started to change the tune. Oh yeah, I don't think buyer comp's going to change much. 22 and 23, a lot of them were saying something different because they were riding high. When you're at 27% margin and everything is selling and there's a line out the door on every model home and in every community, it's easy to say those things. When margin is down to 18.7%, they want to be at that 20% or above level. 25, 27, they don't expect that, but they want to be at 20% or above. Okay, this is not meeting expectations. These are public traded companies. 18.7 probably looks more like 18 by year's end. Okay, that's what some of the reporting is suggesting. They want volume. They want to move the product. They're more concerned about 8.9 months of inventory than they are getting back to 20% right now. They want to get back to 20% plus. Okay, they expect margin compression coming. Okay. So during the recent earnings call, Lennar CFO stated they anticipate further margin compression. So the 18% is what they expect to see moving forward. Okay. Here's Lennar's new net orders for the first quarter by year. Okay. So net orders are moving up. New net orders. Okay. So that's a good thing for Lennar. Okay. They're choosing.
I have the quotes from the Resi Club article with NAR.
What's that?
I have the quotes from the Resi Club article with NAR.
Bring those up. Truth be told, buy side for doesn't have to have. These are some of the quotes that I remember, right? Doesn't have to have an agent. 95% of customers find us online. You got 8.9 months of inventory. How's that working out? Okay. That I remember a whole bunch of these quotes at the time. Okay. And so, I mean, you could drop that off that we heard them. We've covered them here. Like the quotes from home builders saying that, in the future, they find us online. We're the ones with the inventory. You got to move the product. And when you're building a product that is not in the areas where actually you need inventory, I get it. It's a lot easier to build in sunny South Florida. It's a lot easier. Labor's cheaper. The weather's good. It's easy to build. You're building. You're not doing a basement in Florida. These are easier homes to build than in a place like New York or Connecticut or Massachusetts or Rhode Island. Why do the iBuyers typically stay away, or any new tech stay away from the Northeast? You'll have a Colonial next to a Cape, next to some manufactured home. We're going to talk about manufactured homes in a second. Next to, a fourth. It's all cobbled together. The roads are all over the place. Go to Boston and you're like, did some drunk Irish guy design this city? Like, what's going on here? Why is everything so cobbled together? Okay. They call it New England. I'd call it Old England. Okay. It's aging. The infrastructure's kind of falling apart in a lot of respects. Builders don't want to be there. It's more expensive to do it. That's where the demand is. We go back to the chart. Like, go pre-pandemic inventory levels. It's, where do we need more homes? It's Northeast. It's that Detroit, that Cleveland, that Midwest there. It's those areas. Okay. Here are the most closings. You got DR Horton and Lennar closings. This is going back to 2023, according to Builder Magazine. So there you go. They want to get more volume. They're a volume play, and they want more of it. There's no impact so far, tariffs yet. They're similar to inflation. Hey, no impact yet. People are starting to get worried about it, though. It's creating uncertainty. So they haven't had impact on that. And, here's the other thing. Share of workers haven't had an impact on that, they're saying, yet either. But there is a big, if things change, it's another thing that could change prices and margins pretty quickly for these home builders. Okay. Just going back to the comp, this was something 2 years ago. Look at this. This is just a Reddit post from Realtor. Lennar not paying comp. Okay. Lennar was offering 1%. This is all 2 years ago. Okay. And this has been true since 21. Chests are out, market's good, all of that. Okay. Then things start changing. Now paying 3%. They're adjusting on, and so now we're seeing things completely change. Okay. 1 to 4, up to 4% in Southwest Florida. Oh, as inventory increases, that number increases. That number gets more significant. So it's a market dynamic thing. It's a supply and demand thing. This is from Builder Magazine. Builders considering more direct sales for home buyers amid the commission shakeup from Builder Magazine. How's that working out? 8.9 months of supply. If your website solved every single problem, I don't know who shops, by the way, on Lennar, but if your website solved all the problems, you wouldn't have 8.9 months of supply. Okay. There's a lot to it. You got to get the attention, and builders are unfortunately learning that, obviously, the hard way right now. Opens up opportunity for every single real estate agent, professional, team leader, broker. Create these opportunities. When somebody needs help, that's the time to create the strongest relationship. Oh man, 2022, 2021, new homes are flying off the shelf. I'd love to have a piece of it as an agent. Too late. The agents that got a piece of that, got the best piece of the pie, were the ones that had the relationship when they needed you in 2014. All right, let's go to the clip here on Cavco. This is a national manufacturer, modular home, used to be called mobile. Really, mobile homes are, they're mobilely transported to the place that they're going to be permanently affixed. I guess you could, unaffix it and mobilize it somewhere else, but it's not like an RV. It's not, you're not going camping with a mobile home. So now the proper name is a manufactured home. But let's listen to, as affordability becomes an issue, let's listen to I think it's the CEO of Cavco on CNBC. And just listen in. I think this is an interesting listen.
Industries builds modular homes to order at about a 30% cost of a regular home. CEO says the business model is serving them well against a tough housing backdrop. Bill Bohr is the CEO of Cavco. Bill, it's great to have you on. You're in Mississippi. Maybe you can bring some fresh air into this conversation and another tough market day. What's been driving your stock higher?
Yeah, I think it's the general need for housing in this country, and it's so much more needed at lower price points. And manufactured and factory built housing is really targeted right there where the affordability problem is at its worst. And so while, you need to speak about the broad housing market in total, when you really segment it down, a lot of the dynamics that are affecting site builders really aren't the same factor in our segment of the market.
Well, is it true your average selling price?
So here's a CEO talking about, we've got an opportunity now because the affordability, because they're sitting at 9 months of inventory, more people want our product. Yes, I know there's a difference. Post that comment from Jennifer. I know there's a difference between modular and manufactured. Cavco builds both. Mobile and manufactured being in the same category. Modular homes, you're going to have the foundation, all of that. Both manufactured, modular, built inside, outside of the climates, away from the climates, being built inside, all of that. So I probably misspoke because I'm seeing a few different comments there. Thank you, Jennifer. Appreciate that. Let's go back to the comments here from Cav. Seeing an opportunity in the market right now. Their headline on their website is exceptional meets affordable. Okay. Exceptional meets affordable. Let's listen in.
The fourth quarter was under $100,000. I mean, we're talking about a very different segment of the housing market than the traditional builders.
That's right. You've seen traditional builders really over a matter of decades continue to build larger and more expensive homes. They've got limited resources, and if they're going to apply those resources, they tend to go up. And we've gotten to the point with affordability where the median home price is really not a first-time buyer price anymore. And they're just not able to hit those prices. So that's a tremendous opportunity for factory-built housing, and one that we're kind of being the beneficiaries.
What parts of the country are you seeing kind of the...
And leave this up. What he's saying is true. Like the average sale price, first of all, he's doing average and not median, which is fine. But the average sale price is unreachable for most buyers, Pulte, Lennar, et cetera, right? Like, but what's misleading here is, we're comparing the manufactured homes versus a home that is obviously completely, a built home, completely differently built. What's misleading is when I'm buying a home from Cavco, I don't get any land. Okay. So some of the land that Pulte's building on, or Lennar's building on, or TriPoint is very valuable real estate. All right. If you ever watched the movie, I think it's The Founder, the McDonald's guy, when he finally has the breakthrough, like, hey, the hamburgers and the restaurant aren't the value. It's owning the land. Okay. So, Cavco, you're buying the manufactured home and they're dropping it off somewhere, land that you're leasing or land that you own. Okay. But they're dropping it off to you. You either have to lease that land or you have to own it, which is an additional cost. So a little bit misleading here. It's like when, you ever get a call from a first-time home buyer says, I think I want a tiny home. I saw that they were advertised at X. Yeah. You don't have septic hookup. You don't have water hookup. You don't have land to put it on. When you're done with these tiny homes, the prices can become crazy. Okay. So a little bit misleading here. Let's continue.
Most construction activity going on. And are you hamstrung at all by rising costs of, construction materials or labor issues?
Yeah, we cover the population of the country pretty completely with our 31 plants. And I would generally say that if you looked at the last year or so, we've seen an upward trajectory on orders in every region. Now, if we look at it very recently, the Southeast and really across the southern part of the United States is very strong. Florida is a little bit of an exception to that. Florida's been very slow the last couple of years, but generally across the South, the Sun Belt, it's been tremendous. And as we come out of the winter in the northern climates, we're hoping and expecting it'll be a pretty good spring selling season. So we expect there to be general strength with it, most pronounced in the South.
I'm surprised. We've heard from a number of big retailers, everyone from Walmart to maybe Dollar General on down. They've talked about consumers now starting to pull back somewhat. By the end of the month, they might be running out of funds. They don't have quite the discretionary spending that they might have a year or two ago. I'm surprised you wouldn't be seeing, or at least worried or bracing for a similar impact, at least at the margin. But the stock's full steam ahead, and it sounds like so is your order book.
Yeah, it is, and I'm not saying that those factors don't impact us. They clearly do. Consumer sentiment, certainly interest rates, those are all big drivers for our buyers. But we're in a situation now where really since 2008, this country is underbuilt. And so there's such a need. mean, right now, the median price point, we've
Okay.
estimated that there's only about
The week of the consumer reports, consumer reports are on every business's mind. And, he said, we certainly are concerned about that, even though we have an affordable product. These manufactured homes can be tricky because there's a lot of hidden costs. And it's like, I mean, I look at this one, I'm like, wow, the label. I mean, I think this is very sharp. Look at this home. I mean, this rendering looks amazing. Okay. And then now we're inside. It's like, wow, this is very sharp. You can see the line here where obviously these homes are put together, kind of like a puzzle. And it's like, wow, 4-bed, 3-bath. We just saw the average price, $100,000, 2,900 square feet. I mean, that's a nice functional floor plan. I really like that. This is something I could see myself, buy, if I'm a buyer, it's like, hey, I could see myself doing this. We're going to buy it. Let's go here. Let's go to, Tomball, Texas. All right. Palm Harbor Homes. Let's take a look. Home of the week is the Ritz. That's an interesting name. Oh, wait a minute. Here's that house that I liked. Here is the LaBelle, and it's $355,000. Okay. Or it was $355,000. They've now moved it down to $335,000. Even for this, it's not meeting the affordability need of the, and by the way, you need something to put it on. Yeah, they can deliver. Everything is delivered for you, includes delivery and setup at the $335,000. AC, a 12-year structural warranty. It includes all of that, but you need somewhere to deliver it. It can't, it's not going to float in the air. And so the manufactured homes, to me, I mean, you can really get yourself in trouble. If you're the conversation about having long-term appreciation as an owner kind of goes out the window a lot of times when we're talking about manufactured, not modular. Two different categories. But the appreciation conversation kind of goes out the window. Okay. And especially when you're leasing the land. And so, I don't know. I don't know that this is the solve that I would be, looking for in our, trying to find a solution for affordable home inventory. I don't think this is the solve that I'd be looking at, but certainly Cavco seeing an opportunity with where those national home builders are at, thought it was worth mentioning. I want to see the solve. Listen, we've been building the same way for decades, but 3D printing, if you've looked at any of that, it's very interesting. Okay. That can actually reduce cost, and that house isn't going anywhere. It's going to take a lot to move that house. So, last thing on builders, here's a real idiot on the internet. This Michael Burry stock chart. This isn't actually Michael Burry. It's somebody, who has watched too many movies. 2007 called. It wants its housing glut back. 500,000 new homes for sale. December 2000. You're seeing this chart a lot on X. This is one family homes for sale in the United States. Like we're getting back up to those levels on single family homes. Why? Because Lennar and Pulte can't build to meet the affordable demand. It's 9 months of inventory. Okay. Thankfully, Logan straightens this guy out. Hey, Logan Motoshami is going to be on Knowledge Brokers Podcast tomorrow. Little heads up. Make sure you subscribe over at Knowledge Brokers Podcast, separate channel. Haley will link it up. Logan's coming on tomorrow. It's going to be a fascinating conversation. Do not miss that. That'll be up somewhere tomorrow afternoon. But here's the thing. You got 119,000 completed homes for sale today. New construction. And in 2007, you had 4 million active listings. Okay. Look at the difference in active listings, total housing inventory. So you can parse out, new construction and do whatever you want, on X, doom and gloom as much as you want, or you can just look at the reality. We don't have anywhere near, we have such a significant drop in inventory from that level, even from just normal levels. We're still below as a country. So 2007, not anywhere close to where we're heading, obviously. Just going back quickly to what I would actually like to see more conversation around when it comes to building homes versus, let's build more manufactured homes, would be, hey, what types of homes haven't we built? Fire resilient homes. Okay. KB Home unveils the first fire resilient community in Southern California. 3D printing. Some of that stuff, I think, makes a lot of sense. What's not making sense for Gen Z and millennials is, will they ever buy a home? The home ownership rate is flatlining in 2024, or flatline in 2024 as these housing costs soared. Gen Z millennial home ownership rates have stagnated. Okay. So if we're looking at baby boomers, 80% homeowner rate, Gen X, 73%, millennial, 55%, up from 16%, obviously 2000. Not many millennials were buying then. That's about, I'm in the older category of millennials. It's about when I bought my first home, just after 2000, right about here, 2024. So when it was 20% of us, I guess. We've seen a really sharp move up here over the last 4 to 8 years, but now flatlining out at 55%. And Gen Z, listen, Gen Z is still pretty young. But started at 20%, now at 26%. But that sharp increase we saw right in here, the 2020s, has now flatlined out. So harder for Gen Zers who, listen, Gen Zs was 12 years old to 27 years old in 2024, born between 97 and 12. So I don't expect a lot of Gen Zers that are 12 years old to be buying a house. Okay. In this analysis, though, only adult Gen Zers were included. So 19 to 27. Okay. So when we look at 20-something%, that's the 19 to 27-year-olds. All right. Millennials were 81 to 96. So the millennials are 28 to 43 years old, and Gen Xers are 44 to 59. Boomers, obviously, 60 to 78 in terms of where they fell in. All right. So the older Americans saw their home ownerships increase slightly, and we're seeing these lower age groups seeing their home ownership rates decrease. Gen Zers, millennials are less likely to own a home than their parents at the same age. And this is the big difference here. Okay. A baby boomer at age 27 was 41% homeowner. Gen Z at age 27, 33. So you got an 8% gap. Doesn't mean you got an 8% drop off in folks who want to own a home. That data has been clear. Gen Z, millennials, both generations want to own a home. And in order to own a home, you got to be making enough money. You got to have a job. We've got plenty of jobs. But speaking of jobs, let's take a look at unemployment here for the week as the Fed continues to watch it. We do as well. Uncertainty or any movement in the job market can actually bring relief to the would-be home buyers, Gen Z or millennial, in terms of a lower rate. We don't get any of that relief this week. Initial claims was 224,000. It's a decrease of 1,000 from the previous. It's actually under expectations, I think, by 1,000 as well. The 4-week moving average is right here at the 224. So no movement on unemployment. And as we look forward here, you're actually seeing a 10-year that has moved up this week. Over the last month, this is the highest point we've seen on the 10-year, 4.36 plus on the 10-year. So, we're not getting, for all the talk of uncertainty with tariffs next week and everything else that's happening, we're not getting enough of a break in the labor market. This week's another reminder. Hey, we had momentum, and now that momentum seems to be waning a little bit. There's not enough uncertainty to actually move, investors over into treasuries, which would push the 10-year down and, create a lower long-term rate for housing, like the 30-year fixed. And that's why you're seeing the 30-year fixed come in, a tick up from where we've been. And the trend line was like, man, could we get to 6.5? We're at 6.8, and I don't expect to see much change here today, based on those numbers that we just took a look at. So March 26th reading yesterday, 6.8, 10-year where it's starting the day. I wouldn't expect much of a change there. All right. If you missed the Zudilio webinar I did yesterday, if you're a BAMX member, it'll be up. It's uploaded into replay on BAMX for you. By the way, if you want to kind of compete with, the different, issues sellers are having in the market, bring them more offers. BAMX members get a cash offer platform included in your BAMX membership. This is a $2,400 value that Zudilio has included in our membership, $2,400 annual fee. It's included with everything else we do at BAMX for just simply $590 a year. Okay, so that's a couple of bucks a day. With that, you get everything that we do in BAMX, new content every single week. Fridays, we get a new content drop for you that are relevant and timely. This is my favorite one from last week, the best time to sell, which included a video script, an email script, and a blog that you could post on your website with the best time to sell data. Since I've been using the newsletter for my team inside of BAMX, I've seen my open rates double, consistently week over week. My click-through rate has almost doubled week over week. The community here on BAMX all lives in one place. No more Facebook spam. The groups are the worst. Just so much spam and nonsense coming in to these Facebook groups. And then you got to navigate all the nonsense on Facebook. This is just for agents who want to have today's information at their fingertips. We sift through the BS for you, give you the slides from our hot sheet each and every single day, carved out so you can just click and download, whether it be on the mobile app. There is a school app that you can get all of this on, or whether it be on your desktop, all the slides that we use in each show right there, as well as the referral opportunities that are happening every single week inside of school. You can search referral partners pretty easy with this map feature that we just added as well. BAMX on school.com/BAMX. Grab your Zudilio platform included in your BAMX membership. Just go to school.com/BAMX. That's your hot sheet here, wrap up for the week. Tune in tomorrow as we have a new Knowledge Broker separate channel. Make sure you subscribe to that with Logan Mohtashami. We talk about a bunch of Logan stuff here. So if you're interested, head over to Knowledge Brokers. Make sure that you hit subscribe and notification bell so you don't miss that. Later on here today on this channel, we'll have another walkthrough podcast for you. Eric's going to break down a new feature on Instagram, I know on this episode, that you do not want to miss if you want your Instagram following actually to be engaged with you. So if you're interested in that, that'll be up later today as well. Hope everybody has a great rest of your Thursday. Until next time, toodaloo.